Welcome back to the Dinar Chronicle, your trusted source for breaking updates and critical analysis on Iraq's currency revaluation developments. If you're holding Iraqi dinar or closely following the global currency reset, what we're reporting today may be one of the most significant moments in recent history. A major shockwave has just hit the financial landscape, and it's centered on Baghdad. Moments ago, official reports began to emerge from multiple credible sources within Iraqi banking channels, confirming that the Iraqi dinar has now revalued to $4.40 per 1 IQD. According to leaked memos from within the Central Bank of Iraq and statements from insiders tied to major U.S. financial institutions, cash-in procedures are already being initiated, with early appointments underway at select redemption facilities and Tier 1 banks. This is not a drill. After years of speculation, countless delays, and tight-lipped responses from government officials, the first wave of public redemptions has quietly begun. While Iraqi news networks remain relatively silent for now, likely due to state-imposed media blackouts to control public response and prevent currency hoarding, back-channel communication from within Iraq's Ministry of Finance confirms that this morning's announcement was deliberate and strategically timed. The revaluation is officially being referred to internally as Stage 1 activation. Here's what we know. At approximately 9:15 a.m. Baghdad time, the Central Bank of Iraq finalized system integrations with SWIFT and QFS-compliant payment infrastructures. That means the revaluation is now visible on international trading platforms, but only at select banking levels and for approved participants. The $4.40 rate was confirmed across several Tier 1 institutions, including Chase, Wells Fargo, and HSBC, with parallel confirmations from European central banks in Frankfurt and London. This supports what we've been hearing for weeks. International coordination on this reset has been far more advanced than publicly disclosed. At the core of this historic event is Iraq's strategy to reintroduce its national currency to global markets with real value, backed by natural resources, new trade partnerships, and a gold-linked asset structure. Analysts inside the IMF have been forecasting this movement under their Currency Equalization Directive, which has been developing quietly behind the scenes. The $4.40 rate appears to be both a market-based adjustment and a political signal. For context, Iraq's dinar was once valued above $3 prior to the Gulf War. This new level not only reflects the country's regained economic footing but also positions Iraq as a stabilizing force in the Middle East's financial future. Cash-in operations are starting regionally in the United States, Canada, Australia, and parts of the EU. Only pre-authorized currency holders and long-registered IQD investors are being contacted initially. Appointments are being handled discreetly, with NDA, non-disclosure agreements, heavily emphasized. However, reports suggest that by the end of this week, the broader public may begin seeing rate visibility at teller windows, beginning with HSBC branches in major urban centers like New York, Toronto, and Sydney. Here's the critical point. The revaluation was not announced via mainstream media or official press conference, and that appears to be intentional. Sources indicate this quiet launch, what's being called a soft rollout, was orchestrated to avoid destabilizing local economies or creating black market chaos in Iraq itself. Inside Baghdad, new security measures have been deployed around the central bank and major commercial branches. Residents have reported unusually heavy military presence since last night, and electronic payment systems were temporarily suspended during the integration phase. Now let's talk numbers. At $4.40 per dinar, a holder of 1 million IQD now sees a paper value of $4.4 million USD. But there are important variables at play. Some exchange centers are adjusting final rates based on tier classification, with Tier 1 clients, those pre-registered or who hold significant amounts, possibly receiving preferred rates or structured payout options. In the U.S., IRS tax classification on foreign currency exchanges is still unclear, and legal teams are scrambling to assess whether these redemptions will be taxed as capital gains or foreign asset windfalls. Treasury guidance is expected within 48 hours. We're also hearing that the Federal Reserve and U.S. Treasury have been in back-channel communications with Iraq's central bank for weeks leading up to this event. The goal? A coordinated liquidity release that won't trigger inflation or crash the bond market. Key figures in these talks included Janet Yellen, representatives from the Bank for International Settlements, and Middle Eastern financial envoys. According to unconfirmed reports, trillions in IQD were repatriated to Iraq over the last 72 hours in preparation for this move, and dormant digital wallets tied to sovereign bond redemptions are being activated. Domestically within Iraq, the revaluation is expected to provide immediate benefits to the average citizen. Price adjustments are underway in major retail sectors, and the purchasing power of the dinar has already doubled in real terms. Government contracts, especially those involving oil, gas, and infrastructure, are now being renegotiated to reflect the new rate. Sources within the Iraqi parliament suggest that emergency economic provisions will be passed tonight to stabilize market pricing and prevent predatory pricing behavior. Globally, the response has been swift and cautiously optimistic. Forex markets are reacting with extreme volatility as traders race to recalibrate portfolios. Regional currencies like the Kuwaiti dinar and Saudi riyal are holding steady for now, but speculation around similar revaluations is heating up. Central banks across Asia and Europe are closely monitoring the impact of the IQD's sudden surge and have called for closed-door meetings to address the ripple effects. For holders of Vietnamese dong, Zim notes, or other speculative currencies, today's move adds fuel to the belief that a broader global currency reset, or GCR, is not just a theory but an unfolding process. Several financial commentators are now revising their 2025 outlook to include dinar-backed commodity swaps, cross-border oil contracts priced in IQD, and a possible gold-pegged reserve standard introduced through Iraq as a pilot nation. For viewers wondering what happens next, stay alert. Bank screens may begin reflecting the new rate at varying intervals, and notifications could be sent by email or encrypted message depending on your registration channel. Do not attempt to cash in at unauthorized locations. Fraud and misinformation are rampant right now, and bad actors are exploiting this moment to deceive unprepared holders. Always verify your information through official bank representatives or regulated financial platforms. The Dinar Chronicle will continue to monitor every new development and report back with verified updates as they become available. If you haven't already, subscribe and turn on alerts so you never miss a critical update. Our team is working around the clock to bring you only the most accurate, well-sourced, and timely information on the unfolding IQD landscape.